Kia ora and welcome to Shared Lunch and this short bonus episode where we unpack some of the ins and outs of Contact Energy's proposed takeover of Manawa Energy. There's lots to digest with this $2.3 billion deal, whether you're an investor in the energy sector or a consumer of power or a business hit by recent power hikes. To shed some light on why this is a good idea, I'm joined by Contact Energy CEO Mike Fuge.
Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording.
Mike, thanks for coming in to see us today. There's been a lot of media about this proposed deal, $2.3 billion, and it's one of the biggest things that's happened to the power industry in quite some time. Today we're going to look at what it means for investors principally. First of all, for listeners and viewers who don't know too much about Contact and Manawa, can we kind of explain for us what assets you have at the moment in generation and how that might change if this deal were to go through?
Yeah, sure. So Contact Energy, probably what we're best known for in generation assets is geothermal. And over the last 3 years, we've actually invested a lot into building more geothermal with the Tauhara and Tohoka 3 projects. In fact, what we've built to date in geothermal in the last 3 years is equivalent in generation output as this deal. And that just give it some perspective. And then we have the hydro assets, obviously the iconic Clyde and Roxburgh dams, and the Clutha system, which we'll talk about a bit later. But they were part of the foundation. And then with that, we have thermal assets, Taranaki combined cycle plant, the two peakers, and the Whirinaki diesel peaking plant over in the Hawke's Bay.
Just on those, Mike, we're talking oil and gas for those?
We're talking gas.
When you say thermal, gas?
Gas-powered.
Gas-powered.
Apart from Whirinaki, which is diesel-powered, and that sort of sits to come on in extreme periods of extreme shortage.
Okay, right. So the idea would be that you would phase those out, is that?
Yeah, so we're on a plan to phase out thermal generation and decarbonise our portfolio, and we've been very clear about that. So geothermal is as good, if not better, than nuclear power. It has asset utilisations of between 95 and 98%. It just runs 24/7 all year round. And then we have our hydro schemes, which are incredibly valuable, but they are spring and summer weighted. And just as you get to the end of summer, your water starts to come down, it's a long summer, and you start to get a bit short, which is why we had the thermal fleet to kick in at that point and provide fuel, which is also why we had the Aharoa gas storage facility. Now, we want to decarbonise. So you can't decarbonise unless you have a solution to that conundrum. And that's what this deal is about, because Manawa has about 1.82 terawatt hours of hydro, but that's winter weighted rather than spring summer. So as our water with our existing assets starts to run out, you can look forward to winter with the Manawa assets and their water starts to come in, and there's a very nice hedge in there.
So is it that hydro is the answer to the decarbonisation more so than other renewables, wind, solar, batteries? You're in those in development stage anyway.
Yeah, so the answer is always, I've been very strong on this, it's all of the above. So obviously wind and solar are the lowest cost, but they're intermittent. And yet when they're intermittent, when the sun doesn't shine and the wind doesn't blow, you have to have a way of firming it. So,
and you mean by firming?
So when there's no electricity, you firm it up so that when we turn on the lights at home, they actually do go on. So the showers are hot and the beer is cold. That's the important part.
It sure is.
And so you can get with different locations of wind and solar, you can get what we call a statistical forming, because they know we'll be there. But actually that's not good enough for the ordinary consumer. It has to be firmed. And so that's where batteries, so we're building the battery at Glenbrook, but it's also where hydro has an incredibly important part to play in being able to firm in those periods of scarcity when the wind isn't blowing or the sun isn't shining, but also to cover the peaks. So you've got the geothermal, which is always there, and then as the demand goes up and down, you have your wind and solar, but for the gaps, you need hydro and batteries.
What about low lake levels and the like, though? Because it's not always the best time for hydro, is it?
No, but low lake levels, what happened specifically this year is July was very low rainfall, and it also had low wind. And so there are a couple of things going on. What you saw was extreme prices for a period of about 2 weeks, which was actually Whirinaki being dispatched into the market, diesel. But what you saw when there was a lot of rain that came in is that prices went straight back down to almost to zero. And that's just supply and demand. So the answer to that is actually, as I said, it's a number of solutions. One, we need to build more wind and solar and more geothermal. So you raise the base. And then when you have that period of shortage, it's much less dramatic. You can dispatch maybe intermittent gas, which we've got. We're retaining gas. You put it in just for those very short periods. You have batteries and you have hydro, which is weighted more towards winter.
How long do you think you will have gas, though? I think 2035 was what you were hoping
We've committed to decarbonise net zero by 2035. I think gas has a part to play for covering those dry year periods for
even with all the other things you're doing?
Out to about 2040, I think gas still has a role to play. You can turn it on, you can store it. It's got much lower carbon intensity than coal.
Right.
And so for that once in 5 year, once in 10 year occurrence, it's going to be important as a backup. Meanwhile, things like hydro, extended operation of our hydro assets as they stand today, investment in different options around storage, around batteries, investment in more solar, more wind. The other thing that really was brought into play during the shortage was demand response. So both the smelter and other large commercial actually turned down their power demand by over 200 megawatts, which is bigger than Tauhara. So they turned down.
This is TY and...
The TY, New Zealand Steel, a number of dairy companies. So it's never one solution. It's always a combination. And that's part of what, even in mass market retail, we've been talking about. The answer to decarbonisation is not just building generation. It's also the way we respond to periods of scarcity. And if we can delay our shower, if industrials can come off for a short period and get paid for it, then that's all part of the solution.
It's always a bit of a dance, isn't it? It sounds like you're forever balancing. Yeah.
That's energy. I mean, that's why I came into energy many years ago.
Yeah.
It is
a challenge.
It is a challenge. It is fun. It is stimulating. These challenges never go away.
Yeah.
Sometimes there are periods of oversupply and sometimes there are periods of undersupply. And responding to those challenges is what gets us up in the morning and gets us coming to work. Mike,
if we look at this proposed deal in terms of the Manawa shareholders, I think $5.95 per share is what they will end up with. We've got a payment which is combined shares, debt, and obviously cash. In the end, what are they actually getting?
They're getting a cash consideration of about $1.16 a share, and they're getting they're getting shares issued in Contact Energy. So they continue to participate in the energy transition. They continue to participate in the building of renewable energy assets. They continue to participate they get to participate in mass market retail. So they're still very much part of the energy sector and the renewable energy sector as an investment option, which I think is a great outcome.
So they'll be 18.5% of your register?
Total, they'll be 18.5% of our register. So obviously their major shareholders, TECT and Infratil, form very much part of that, which we think is a great outcome. Because one of the things about Contact Energy is that we have over 70,000 investors on our base, Kiwi investors. We are a Kiwi company, so no OIO approval required. And having a cornerstone investor at around 10%, like Infratil, of Infratil's quality, is a great vote of confidence in our strategic path as well.
What about Contact shareholders? Are we going to see some dividend love there?
We have announced the dividend love. We announced an increased dividend at the beginning of July, and as we said, as part of this deal, we're actually prepared to put our money where our mouth is in terms of increased dividend in 26 and 27.
Thinking of them again, when will this deal actually pay? When will, the costs, all the things that go around it? There's also a fair bit of approvals, lots of lawyers' fees, regulators' fees, you name it.
So, look, we've announced the deal. We've been working on the deal for a considerable period, probably since about December 22.
Gosh, is that 2 years nearly?
Yes, these things always take time. But the important thing is that we expect the Commerce Commission approval to take 6 to 9 months. And then there is the independent appraisers report that goes to shareholders who then vote, and then there is a date in court, and then the deal is done. We expect that the benefits will be fully realised within 18 months to 2 years of that. So we've said, look, Manawa has a normalised EBITDA, say, of about 140 million a year at the moment, and we expect to bring that up to about 220 million, if not more, within a 2 year period.
2 year period.
And that's when the benefits start to flow. There's also upside in that in terms of the development options that Manawa has, which is fantastic, and in terms of what I call the micro optimisations about how we integrate the assets together.
Because they've got 25 hydro stations, small to medium, I think, most of them. I mean, do you see any consolidation there?
Not on the the consolidation or the opportunities are at the corporate level, where we have duplicate systems. We have a duplicate maintenance system, a duplicate finance system, and where there's duplication at the corporate level. What we do see opportunity in is the operations are very much clustered in areas we already are. So, for instance, Manawa is very strong in the Bay of Plenty central North Island. That's where our heart and soul is. Manawa has significant assets in the Taranaki. We're in the Taranaki. Manawa has significant assets in the Deep South. We have significant assets in the Deep South. So there is opportunity for the teams to work together and be integrated together. But that isn't about cost savings. That's just about working smarter.
And in terms of the development projects they've got at the moment, I think is it around 4 wind, 2 solar from memory. Will you be keeping those on?
Absolutely. And that's when you're in development, one of the important things that you need to have is what I call competition for capital. So what those sites will bring is that one of them is already consented, Argyle, in the north of the South Island. And then there are 2 very advanced development options for wind, one in the central North Island and one in the lower South Island. And having a development portfolio where the teams are working hard to get their project forward, to have that competition for capital, to get the best return for shareholders. And what that means is that you either do the best projects first, which means consumers then get the lowest cost electricity as soon as possible. If we're all operating in different ways, and you end up with sometimes sub-economic projects going first, and that just ends up with a bad outcome for shareholders and a bad outcome for consumers.
Is there some wind expertise that you're hoping to garner from this deal? But given
absolutely. Now remember, we have the relationship with Roaring Forties, and certainly Manawa have a natural wind capability already. Dion Campbell, their chair, is coming on the board. Now Dion and I have intertwined our careers over many years. Dion obviously has some fantastic wind experience from his time with Trustpower, and then as CEO of Tilt. And so having him on the board with that both energy market and development experience in wind will be fantastic.
Okay, so we could see some interesting things happening with wind, with Contact?
Absolutely. We're already got some sites, but having these sites come in will just add momentum. I talked about bringing our future forward faster is very much the theme of this deal.
One thing you did say on our program not so long ago, back in February with the half-year results, was you thought solar was a niche prospect in New Zealand. Have you changed your mind?
No, absolutely. So we have announced, obviously, the Christchurch Airport Kowhai Park solar. The opportunity there is that solar can be built quickly. Solar doesn't get firmed. You need something else to firm solar. So it will have always a niche. It always look at the weather out there today.
This is Wellington.
New Zealand doesn't have the same resource as, say, Australia or Chile, but it does have that niche application. The wonderful thing about solar, remember, is it's summer weighted. And one of our major industries, dairy, is summer weighted in terms of demand. So there is, again, a niche application, I think, for solar, but it won't be providing the same broad base, and it doesn't go on at night.
In terms of what you're paying, the 48% premium, there's also some red flags with Manawa, I would say, at the moment. Just a little while ago, they had earnings downgrade, about 25%. I think there was a bad debt with the retailer involved in that. They've got some low lake levels they talked about at the time when they did their Q1 report. What are you thinking in terms of actually, is it turning stuff around, or, I mean, are there concerns there? You've obviously done your due diligence.
Yeah, no, we did extensive due diligence. So the very reasons for the earnings downgrade are the very reasons why Manawa is better together with us, because that broader portfolio has a broader resilience. Now remember, when that high price period, we did the deal with Methanex to allow us to burn gas, which immediately stabilised the market along with Genesis and brought back a degree of rational prices. And Manawa being part of our portfolio would mean it just is not exposed to that extreme type of event. In terms of the assets themselves, 25 hydro schemes, the important thing is that people remember, 8 of those are of a reasonable size and they will fit perfectly within our portfolio. And with the remainder, with those run-of-river small hydros, you've just got to have an appropriate maintenance and risk management strategy in place.
Yeah.
So you're not over-investing, but you're operating them safely. And if you have a common sense approach, we've seen that common sense approach from Manawa as we did our due diligence. And we have we're ISO 55000 accredited in terms of our asset management. We have a rigorous approach to risk and investment and stay in business capex. We don't overspend, and we have a strong track record. Remember, Wairaki is over 60 years old, and we've kept it going for 30 years beyond its design life without a process safety incident. Been operating it very safely, and it's that risk management, that rigorous asset management framework that we apply that keeps us all safe.
You talk about looking at this deal over nearly 2 years. Was there a time when you thought you were going to have to do something else in order to get those renewables, change the portfolio mix?
Oh, look, we always have a plan B. We had a clearly communicated strategy to the whole of market about what we were doing. And this deal just allows us to accelerate that. We always had a plan B.
Now, investors are not just looking at the dollars and cents. They are consumers a lot of the time. Some of them are businesses. We've had the Whinstone Mills close. I will say Mercury was their supplier, not you guys. Does that mean with this deal that we will have better competition, is what I've heard you say in recent reports? Can you explain what you mean there?
So, look, the problem at the moment is that there is no problem with the electricity market. There is a problem with the upstream gas market. And so in that period of scarcity, what you saw is a scarcity of water, a scarcity of wind. What's the next dispatch? Gas. There is no gas, you go to diesel. The moment the rain falls, prices came straight back down again. And so what this enables, it releases, just through the combination of portfolios, another 200 to 300 gigawatt hours a year. And then through the ability to accelerate wind and solar options, that will bring additional supply to market. And if you've got a supply-demand imbalance like that leading to diesel, the only way to solve that is to increase supply, to build more power stations. And I think it's important that people understand that. And look, on Winston's, that was tragic when people lose their jobs like that. But there are systemic issues in pulp at the moment. Not many of us are reading a paper newspaper anymore.
No.
And so they actually had a reasonable power deal with Mercury, which was in line with international prices, and Mercury came out very strongly on that. The reality is that pulp economics globally are challenged. And the other thing I'll say is that other wood processors, like OG Panpac, chose early days to hedge. And they have a very sharply priced PPA with us through the MUG, which we participated in. And because they were willing, to sign up to a 10-year deal and support the renewable transition, they're still in operation today.
Okay, so it's not as clear-cut as it might
No,
appear.
it is certainly not quite as clear-cut as what it was made out.
The Commerce Commission has to approve this deal. You're fairly confident that will happen. You talk about more competition, perhaps better fixed-term contracts for industrial,
Yes.
commercial operators. Tell us a little bit more about that.
So our advocacy is we wouldn't have got to this point if we weren't confident of clearing the Commerce Commission. But we have to keep telling our story.
Yes.
That's really important. We think the increased supply, both through the deal itself and the additional development, will further increase the downward pressure on prices. Now, the thing is, for large-scale industrials, we are passionate that the decarbonisation of New Zealand should not mean the deindustrialisation. And that's why we, particularly as Contact, have been putting in place these long-term power supply deals at very sharp prices with the smelter, with New Zealand Steel, with OG Panpac, with foodstuffs, where counterparties who are willing to stand up to the mark and invest it there in renewable energy, we're prepared to say, hey, here's a project which will benefit from that long-term PPA and do those long-term reasonably priced power deals.
Do you think it's going to mean businesses won't be closing? As you've said, it's not always, it's clear-cut.
It all depends on how fast we can build that new generation. If we get lost in the bureaucracy and complication, then those new projects will not get built. If we're able to clear away some of the bureaucratic tangle and get on with building these new renewable energy projects, prices will quite naturally get back to what is a fair and reasonable level.
Do you mean the fast-track legislation helping with that, or?
It's stable market settings. It's Resource Management Act reform and the fast-track reform. It is it's counterparties being willing to invest or sign up to long-term PPAs. It's all of the above. For our investors, it's the more we can uncomplicate this whole morass that we're in at the moment. If we can make, look, a solar project, Kowhai Park, will take 18 months to bring online. Preparing for it, even with a very straightforward resource consent, took over 2 years. A wind farm takes 2.5 years to build.
Yeah.
The resource consent can take 5 years. At some point, it's more important that we focus on the people who are pouring the concrete and welding the steel than shuffling the paper.
Yes.
And that's the challenge for us as a nation.
Where does it put Contact if this deal does go ahead in terms of where you are in the market, your share? There are other generation retailers, also doing similar things.
It doesn't change our retail share of market because Manawa has no customers.
No, it doesn't. I mean with your...
But in terms of generation, it just puts us on today's numbers just ahead of Mercury, but well behind Meridian. So number 2 or 3 a market.
And is that what you were hoping for? I mean,
that's good. We're not doing the deal just to grow for growth's sake. We're doing the deal because we think it will give great returns to shareholders and that it's the right thing to do for the country in that decarbonisation journey. If you end up second when you were fourth, that's an interesting observation, but that's not why we're doing the deal.
Yeah. What about the political interference or interest? I mean, have you had talks with government about this?
We keep government very well appraised of what we're doing. So obviously we're in constant communication with the Minister of Energy, with the Associate Minister of Energy. We communicate regularly with the opposition. We make sure that we're taking everyone along with us on the journey.
Including Shane Jones?
Absolutely. Matua Shane. I have regular conversations with Shane.
I bet.
And that's the wonderful thing about New Zealand is, look, you can disagree, but you can do it in a way that is respectful and you don't have to cross the road when you see them on the street. It's that's the wonderful thing about New Zealand. It is a village, and the important thing is we can debate and argue vociferously, but we still respect each other.
That's great. It's nice to end on that, I think, Mike. Thanks for coming in today and giving us your insights. And thanks to everyone for tuning in. You can watch Shed Lunch on YouTube or follow us on your favourite podcast app. Mā te wā.